My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people make friends. I'm just trying to make a little money. My job, not just to entertain, but to explain how days like today can happen. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. At first glance, this morning's labor report looked downright apocalyptic.
A house of pain.
At least for the stock market. Kind of like a plague of locusts or maybe a rain of frogs. Remember, the Fed's not going to stop smacking us in the face with rate hikes until the economy slows down. Yet we're seeing above-average job growth in all sorts of areas. Ooh. It's like there's no slowdown whatsoever. You can hear the collective shudder up the spines of traders who figured, the Fed can't stop this inflationary juggernaut. So here comes the October crash. But once you pull these numbers apart, it's clear that while the economy is creating a heck of a lot of jobs, there's a lot less wage pressure, which is what we really care about, than we'd ever expect in the midst of all this hiring. And hey, if the Fed can stamp out wage inflation without actually destroying too many jobs, well, guess what? That would be ideal. We just didn't think it was even possible. Certainly the bears didn't think it was possible. Next thing you know, the averages, which plummeted at the opening and really down hard, started soaring, thanks to a simple realization. These numbers could make it so that we have a soft landing. And that's how the Dow finished up 288 points, while the S&P gained 1.18%, and the NASDAQ pole vaulted 1.6%.
House of pleasure.
It looks like we're going to have nice job growth with less wage inflation. Hey, throw in the sudden plunge in the price of oil that will lead to lower gasoline prices in the next few weeks, and it leaves the Fed plenty of breathing room to let things play out. How do they engineer a slowdown with more than 336,000 people just got hired last month, double what the analysts were expecting? Now, some would argue that we're finally seeing the upside from increased immigration. Lots of people who are happy to work for decent wages. It's just what we heard from John Gibson, the CEO of Paychex, the nation's largest payroll processor for small and medium-sized businesses, when he came on the show. He said there's good job growth, but not much wage growth. Exactly what the Fed wants to see and hear. Today's leaders, well, it wasn't it preordained, the mega caps, the companies that don't need to borrow because rates still went higher on the news. The losers, the companies that might not sell enough food because of a new class of anti-craving medications. It's quite a sight to see how money's just flowing around all over the place. Food and beverage stocks out, rest of the market in, but actually a bullish sign. Can this continue? It's hard to tell where the money will end up, given the fact that it is flying so fast. For example, on Monday, we're going to come in, and you know what? We may see that Cramer fave Pioneer Natural Resources could get a bid from Exxon, maybe for north of $250 a share. I sure hope so, because we own Pioneer big for the charitable trust. Either way, though, we should see a wave of money going back into oil now that's fallen for 12 straight dollars. We'll talk about Pioneer and other potential takeover targets when we convene our monthly investment club meeting at noon on Wednesday. I think the Pioneer deal will happen, if only because we didn't get a denial today. Jeff Marks, my partner for the Charitable Trust and the Investing Club, thinks that there could be a number close to $260. Now, on Tuesday, that's our price target. On Tuesday, earnings, well, we're in the belly of the beast with PepsiCo. It's being held up as a company that sells unhealthy things and likely won't have enough volume if these new weight loss drugs rack up robust sales. Novo Nordisk Wegovy and Eli Lilly's Mounjaro can reduce your cravings for snacks. PepsiCo owns Frito-Lay, and its old tagline, "I bet you can't eat just one," will be sorely tested by these anti-obesity drugs. This team has been roiling the markets and taking out anything food-related. Maybe it runs its course soon. I mean, how low can they take these things? Still, we need to see how PepsiCo reacts to its earnings. Given that near term, I expect the earnings to be pretty darn good. However, even as the stocks come down from 196 to 160, and boy, was it even lower at one point today, it still sells for 21 times earnings. That's not exactly cheap, especially when the yield is only 3.2%, and it looks paltry versus what you can get for the bond market. And if we don't get the robust growth, it will go lower. Now, talk about a company that could go higher. Adobe has an analyst meeting on Tuesday. Even though the stock rallied more than $10 today, it's still more than $40 down from its high, despite the fact that Adobe tells a very good story about e-commerce and generative AI. If you haven't gotten aboard already, it's mighty tempting here. This Firefly that they have, the AI product, unmatched by anyone. Wednesday, Wednesday, we begin the sound check of inflation with the producer price index. I think this and the next day's consumer price index is going to be incredibly important. Perhaps that'll be enough to keep the rally rolling. Consider Wednesday the calm before the storm, because Thursday we get a slew of earnings reports, starting with Delta, Walgreens Boots Alliance, and Domino's Pizza. Delta's pretty much pre-announced to the downside a bunch of times already. They speak an awful lot. It's a beaten down stock, but otherwise, other than lower fuel prices, I can't find something to hang my hat on for a buy recommendation. Domino's Pizza has teamed up with Uber Eats for some additional visibility. The orders were placed on Uber Eats, but they're still going to be delivered by Domino's people. I think it's going to help earnings. Maybe I'm just premature, but I think it'll matter. You know what, though? I don't know if anything can boost the earnings of Walgreens Boots Alliance. Now, here's a very troubled healthcare company with a drugstore division, kind of overwhelms the whole thing. And to me, it seems in total disarray. And the drugstores are the main business. Yesterday, I got a letter informing me that my beautiful two-story Walgreens was closing. No explanation. But it comes not that long after another nearby drugstore, Duane Reade, also owned by Walgreens, closed up. We did our show from the first one when it opened. We interviewed the CEO from there. I asked the manager why they put up two stores separated by one block. He told me it's because there was so much business. Oh, really? I think these guys have no idea what they're doing. These two stores were understaffed versus all the locks that need to be open to buy anything of value. They were a travesty in the end. So's the stock. I'm still waiting for the clerk to unlock that Gillette razor cage. So, no, I will not visit us at your new pharmacy anytime soon. On Thursday, we also have Hormel's analyst meeting. Now, this won't be interesting because the people who take these new Wegovy and Mounjaro weight loss drugs have a chronic need for protein, and Hormel's lineup has a lot of it. That said, it's still a food company. Will anyone even go underneath and see what it has? Friday's finance day, yes, and we start off with Wells Fargo, Charitable Trust, Staple, as well as JP Morgan, Citigroup, and BlackRock. I got the whole thing under wraps here. Ready? I think Wells Fargo will be good, but people will yawn. JP Morgan will be excellent with great prognosis. People will buy. Citi will just be okay, and people will sell. And BlackRock will be fine, and when the dust settles, will be a buy. Cheap stock. Now, you know what we like? We always talk about this fellow, Larry Williams, right? He's the legendary market historian and technician. Well, we went back and forth today. He said he'd get quite excited originally. Remember this? Once the market hit October? Well, we checked in with him today to gauge his enthusiasm after the first really solid day in ages, and he said things are shaping up in excellent fashion, and hold on. Bottom line, I think that growth with low inflation can certainly fulfill Larry's bullish prognostication. If the Fed doesn't need to destroy the economy in order to save it, then we got a much more positive backdrop than any of us thought coming in this very morning. Let's go to Rick in Illinois. Rick.
Jim, how are you today?
I am doing well, Rick. How about you?
I'm doing well. I'm about to do even better because I'm going to go open a bottle of Phosphoro that I saw you at Binny's in Highland Park and picked up there.
How much fun was Binny's? And thank you for that. And I hope you enjoy the Phosphoro. I'm going to tell my wife we're doing a bottle signing tomorrow in Middletown, New Jersey. It's one of my haunts. I don't know. Thank you for saying that. You had a good time, obviously.
I obviously had a good time. Jim,
thank you, Rick.
I have a problem with a stock. This stock that has billions of dollars in sales.
Right.
The company makes a product that's part of a duopoly.
Right.
And they can't get off the ground. It's Boeing.
Yeah.
What
you know
do I
what?
do with Boeing?
I go back and forth with my writing colleague, Matt Horween, on Boeing, and we think that it just has to work out at these levels, $187. Rick, I'm a believer in Phosphoro, and I am a believer at these levels in Boeing. And I thank you for being at Binny's, and maybe if you were in New Jersey, I'd buy one in Middleton. That's a ShopRite, by the way, ShopRite. All right, but I do like Boeing down here at 187. Let's go to Brian in Texas. Brian.
Hey, Jim. Hey, I'm calling today about one of our longtime favorites, Thermo Fisher. I know you know a lot about this company.
Yes, Mark Casper.
I'm concerned about the news recently with regards to it's partnering up with Novo Nordisk on helping produce Wegovy. That sounds like good news to me, and yet the stock has tended to be trailing down ever since that news came out a few weeks ago.
Well, I think that actually that it's going down. They're all going down because of worries about inventory. Now, I think you have to buy it, okay? I think this group is oversold. I think Thermo Fisher is one of the best companies in the world, as is Danaher. I am with you. Call me a buyer of Thermo Fisher. How about John in Florida? John.
Hey, Jim. I'm calling about a company that's going to be mining the Thatcher Pass, Lithium Americas Corporation.
Too risky here. Too risky. We're not going to allow that. We have been great. I mean, what worked today? The companies that we have been saying that are going to make money and make things. That's what's going to stay in bull market mode as we go over through the next few weeks and even months. If the Fed doesn't need to destroy the economy in order to save it, then we've got a much more positive backdrop than most of us thought. On Mad Money Today, we got a big breakup earlier in the week in the form of WK Kellogg and Telenova. So what do we need to know about this deal? I'm taking a bite of the story and give you my take. Then, in a volatile market, it's always good to analyze what you own and see if your portfolio can handle whatever the market throws at it. So that's why we're going to play FI, Diversified. See how your portfolio's Cramer shake out. And it's Breast Cancer Awareness Month, so I'm checking in with a diagnostics company that is using AI to help detect breast cancer, among other kinds of cancers that might go undiagnosed. Don't miss my exclusive with a company that you called about, called RadNet. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.